So the win streak continues. As investors are getting slaughtered holding the bag, I am consistently profiting scalping the SPY both ways, puts and calls, but mainly focused on puts at key resistance as we are in a bear market, but also looking for lucrative scalping opportunities towards key dip levels with the strategy. I am going to show you how to master the SPY using this 30-minute strategy. I ended up having plenty of scalps today. I believe I had over 7 or 8 scalps, only one small micro loss with a 90% win rate. With that being said, I'm going to get straight into the lesson here, guys. So in terms of the portfolio, it's up over 35% within the past 2 weeks. And like I said, investors are stuck bag holding. If they are not hedging, they are getting crushed. If they're not learning how to trade or having a separate portfolio to trade, they're missing out on very, very lucrative trading gains. With that being said, I'm going to show you how I was able to crush the SPY utilizing put options today. Absolutely crushed it with puts. I did 2 call plays. The only loss was a small loss on a call play. It was like 2%. And then I played calls again and made 10%. I'm going to show you patterns and strategies that you can use to consistently profit within this market, scalping the SPY in and out like a sniper within minutes, making a very nice 10, 20, 30% return on the contracts, right? So if you're putting in 10% of your portfolio into those contracts, that's rinse and repeat. 1, 2, 3% return on your portfolio compounded consistently. It's game-changing results as the year goes by with consistency, with no big red days, right? That's the key, to stay consistent, to stay disciplined, to trade the best setups at the best prices, to have no big red days, and to do whatever you can in terms of risk management to never have even a small red day. So I'm going to walk you through these strategies and get you right into it. So let's get straight into it here. So in terms of the SPY, if you watch my video, I clearly stated 3 times within that video yesterday, clearly said, my game plan for puts, and this was the best play that I gave you guys, was what I'm going to do is, and what I'm interested in is this. This is what I clearly stated. You could see here, if we go back in time to Monday, what did SPY do? It had a nice trend up during extended hours trading session. Then it had a pullback, and then it formed a double top, went a little bit higher, but once it formed the back side of the move, meaning it starts to pull back and it fails to turn that previous support, that previous resistance into support, and it starts forming lower highs and it starts to sell off right here, that is when you play the puts for the back side of the move. So what I tell you guys, I told you guys, what I'm going to do is I'm going to wait for the extended hour highs to form. So I was looking at this in pre-market and I said, okay, here's the new resistance. We're back at this 370, which was a key resistance level from Monday with very nice downside potential. The SPY had another pullback during extended hours trading session. So like I told you in yesterday's video, wait for it to form the double top. And then once you get the bearish confirmation where it tops out and it fails to turn this previous resistance into support, once it breaks out and it forms lower highs and it turns this support into resistance, then you're going to want to look to play the puts. And that's exactly what I ended up doing. Sticking to the plan within the video that I posted. I can assure you that video got about 1,400 views, and probably less than 1% of the people listened and followed that trading plan. And that's on them. My account's up 3%, and I'm going to consistently crush it. So with that being said, guys, this is why I decided to play puts. I'll show you exactly where I decided to play puts for a nice scalp. I studied the pullback, so we had a nice pullback right here in pre-market at 369, which was also previous resistance on Monday. And like I pointed out in yesterday's video, the trend was it pumps above the extended hours high, and then once it fails to turn previous resistance into support, which was right here, it cracked. It failed to turn previous resistance into support, forming this bearish doji. So guess what I did? I played puts and I banked. Rinse and repeat. And I had multiple scalps. I'm not going to be covering every single scalp in this video. If you are in Trader Society, you are well aware of how on point and how accurate I've been, especially in terms of today. It was absolutely insane. The win rate was over 90%, but that was the main play and it was all mentioned within today's video, right? So again, it pumps above the pre-market highs once the market opens, and then it fails to turn this resistance level right here into a support level. So it cracks, pumps back up, reacts as a resistance. Play the puts. It's bearish. It's bearish because it had its breakout. It failed to turn previous, resistance into support. It failed to turn that double, that triple top into support. It started cracking. This is the pump. And then what you do is you play puts into this pump. This pump right here, the high of this candle, is your previous support right here. It already cracked. that resistance. So that's when you know when to play puts, when it rips back up. Do not be afraid to play the puts when it rips back up. That is where you get your best entry. So again, confirmation. This is the double top. It crashes. It goes above, it crashes. It's crashing below the resistance level, which is bearish. So if you see it pump back up, once you see the bearish candlestick right here, trend reversal, doji, bearish candlestick, trend reversal, doji, candlestick, previous support, play the puts, play the puts, play the puts. Boom, there you go. That is confirmation. So simple. Utilizing candlesticks. It is so simple. And you just have to also keep in mind that we are in a bear market. We are in a bear market. You got to be focusing and crushing puts at resistance. Forget the support. Focus on puts at resistance. And then this is something that I've seen certain people confused with in my chat room that they just don't get. I will play puts at a support level, but they don't understand. They'll call me out to be like, you're playing puts at a support level. I'll be like, no, that's previous support. That's now resistance because that support level cracked. Like for example, there was support right here. There was support at 366. It cracked and then it reacted as a resistance. So I played puts again. And then for example, there was support right here at 363. It cracked and then it reacted as a resistance. So I played it again. If it cracks and then reacts as a resistance, I will get in at that previous support level. Not when it's initially at support right here. This is initial support. No, when it cracks through and rips back up and reacts, previous support reacts as a resistance, then I will look to play puts, man. Look at these opportunities. Look at these opportunities. Strong support, big upside. It cracks, pumps back up, previous support reacts as a resistance, play the puts. Strong support right here at the previous closing price at this 363 level. It cracks, pumps back up, reacts as a resistance, play the puts. At those key levels, take advantage of the trend. The trend was overall bearish. So when you see it pump back up very, very quickly at a key support level, overreaction 361 to 360, 480 to 365, previous support reacts as a resistance, big upside potential, now big downside potential because the trend's overall bearish. You're going to want to play those puts. Very simple stuff utilizing price action. Now, in terms of other patterns that I want to bring awareness to in the 30-minute chart. So one thing that I want you guys to know in terms of like when I'm making these videos, I just want you guys to know within Trader Society, I'm absolutely crushing it. Like you have to see it in person. You have to be in the group to actually see it. These videos can only do so much justice in terms of the trading recaps. You really have to see it in real time to see how well I'm crushing it. I can sit here and, pull out all of the trade alerts that I mentioned in the SPY and SPX floor and organize it and make it all categories and stuff like that. But that's just something you have to see and be in the group for that, right? But with that being said, I'm going to try to bring awareness in terms of the patterns that, I've traded today. So those were the main patterns that I took advantage of in the previous support reacts as a resistance with the overall bearish trend. Now, let's go over some patterns. So in terms of some patterns that I do want to bring awareness to with the SPY, I was utilizing Friday's chart and Monday's chart using the 30-minute candles. So let me just see if I can pull some of these patterns out from off the top of my head, because this is what I really wanted to mention to with my last point that I just said. I need you guys to understand that I'm trading on my phone. I'm literally trading on my phone using Webull charts. That's what I'm using. I'm using Webull charts for the 1 minute, the 5 minute, and the 30 minute. And then for the daily chart, I like to use the TD Ameritrade mobile app platform, right? So when I'm making these videos, you just have to understand it's not going to be as clear to me in terms of exactly what it is that I did, because I didn't trade using these Thinkorswim charts. I traded using these Webull mobile charts, right? So that's just one thing that I also want to bring awareness to as well. But in terms of what I can see as of right now, let me just kind of scope this out for a minute right here, because this is all straight off the dome. This is all literally straight me just making the lesson. I got to get the video out. I just got to make the straight lesson. There's not a lot of preparation that goes into this, but it's going to show you in a sense what it is that I'm doing. But if you want to see it all in real time in the best sense, in the best education, it's all within Trader Society. So let me just kind of scope out some patterns here real quick, right? So let me see. Okay, so right here. So we got these two bearish red candles. We got these two bearish red candles, and then it pumps. So that's an opportunity for calls. That's an opportunity for calls. In terms of other patterns, let's see. We have the same pattern right here. We have the green, we have the red, green, and then red, 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 right? So we have the red, green, red. What did I tell you guys about that pattern all the time? When you see that red, check this out right here. Green, red, and then it follows up with two red candles. That was Friday's pattern. Here we go again. Green, red, and it follows up with two red candles. Same exact pattern. And then it starts to pump, right? Similar pattern, similar situation. Another pattern that I want to bring awareness to, and this was for calls at 2 p.m. I didn't play this one, but shout out to Ricky. He ended up playing this one. So check this out. Utilizing the Friday 30-minute chart pattern, history repeated itself to today, right? So I'm going to show you this pattern right here. So in terms of what is that I'm looking at these, let's see, these two red candles. You have these two. Okay, so check this out. You have this green candle here, and then it follows up with two red candles, and then it soars at key support. You have these two red candles at support. It follows up with a green candle, and then it soars, turning that previous support into resistance, another opportunity for puts, an opportunity for calls down here, right? So when SPY is getting beaten down bad, and you're seeing this pattern right here. So again, just to quickly show you, you have this green, double red, and then double green. You have this right here, same exact pattern. Green, double red, and then it explodes back up, right? That was another opportunity for calls. I didn't play that one. I'm not going to play every pattern, everything is that I see. But yeah, those are just some things that I want to bring awareness to. And then in terms of 30-minute chart, guys, I mean, look at this, man. There was a lot of similar patterns if you were to compare Friday to today. I mean, just look at this. And we have 30-minute green, 30-minute green, 30-minute green, all at that nice 370 level. Sells off hard, sells off hard, sells off hard. Very similar sense with the 30-minute candles. And then when you have that first red candle, and then when you have that first red candle, and then when you have that first red candle on the 30-minute, for the most part, it's nothing but downhill. Check this out. Green, red, and then it follows up with more red. Green, red, then it follows up with more red, right? So, yeah, highly predictable stuff. Phenomenal trading day. And I'm telling you, if you utilize the 30-minute chart and kind of just wait for these candlesticks to about to close, like within the last 10 minutes, or trade the opening of the next one, there's so many opportunities. It gets a little bit more complicated and complex. Can't go over all of it within this video, but I just want to bring awareness to some of that. Now let's kind of go over the updates in terms of the SPY. So in terms of the SPY and updated price action houses, we were getting absolutely slaughtered, man. And this is what happens. If you're just going to blindly invest into your money, right? If you're just going to blindly throw money into the stock market and you hear people saying, oh, you got to fight inflation. You know, who cares if you're losing money? Who cares if you're bag holding? You know, if it's in the bank, you're going to lose 8% on the year. Well, I'd rather lose 8% on the bank than lose 50% on the market in a couple of months, right? So, you know, there's other strategies. You can't just blindly go about these things that people say. Yes, inflation is real, but blindly throwing money into stocks is not the way to fight it. You have to be very logical with the investments that you're making. I'm really not making too many investments right now. I'm mainly sitting all in cash. I do have an investment portfolio, but I'm not heavily into that. I'm heavily into my trading portfolio. I do believe there's going to be a great opportunity for investing. I just think it's way too early. I think there's so much more downside. I could see SPY going much, much lower within time. That's why I'm not investing heavily right now, right? I'm putting my money into my skill set and what I do best. And that's scalping. That's getting in and out within minutes, not bag holding anything, not holding anything. And if you compound the gains, and if you are consistent with your results, and if you understand risk management, position sizing, it can be in a sense where it's very rare to have a red day, and you shouldn't be having any big red days if you stick with the rules and you're sizing accordingly, respecting risk management, position sizing. And as long as you're compounding the account, consistency is what is rewarded. You have to understand, having a lot of money is not going to make you a better trader. It can make you more money if you know what it is that you're doing. But in terms of who truly gets rewarded in the stock market, it is consistency, discipline, and compounding your account. That is truly who's getting rewarded within the trading market, right? And you have to understand your style. Some people do well holding. I don't do well holding. I do very, very well scalping. I get in, I get out. I'm buying puts at the key resistance levels. I'm selling into the dips very, very quickly for a nice profit, rinse and repeat. I'm buying calls at the key support levels, being extremely cautious and careful and waiting for the true best levels and the unreal levels towards the theta decay, towards expiration, towards when they're about to expire, towards 2 to 3 p.m. when calls are going to print, when SPY is oversold for a micro pump up back to that previous support reacts as a resistance level. That's what I'm doing in the call sense, right? When they're extremely oversold and beaten down and when calls have just been slaughtered so badly, they're due for a quick micro pump just to crash right fucking back down. So I'm trading both ways in a sense. But obviously, in terms of printing, I am focused on puts at resistance. And if you were to look at the weekly chart on SPY, I mean, if we were just take an overall look at the weekly chart on SPY, if you haven't been making money from August 15th up until now, and you've been playing puts at key resistance for the most part, you're just doing something wrong. These are all bearish red weak candles, except for this one right here. But like for the most part, like I said, like everyone should be doing well for the most part. And if you're not playing puts at resistance, you're not scalping, you're not getting in and out, you're not understanding the strategies, you're not understanding the patterns, you don't understand risk management and position sizing, right? You can have a very high win rate, but if you're not cutting losses quickly and if you're sizing in very, very big, you're just going to give it all back. I'm not sizing in big. I'm putting in like 10, 15% into my portfolio into these positions. And I'm really not that interested in doing same day expirations anymore. I'm not as attracted to them as I was. As my account has grown bigger, I'm more attracted to 1 day expirations. So typically what I'm doing from now on is mainly I'm doing the next expiration. I'm doing the closest expiration past the same day expiration, right? Whether that's 1 day, 2 days, or 3 days with the SPY. So that's what it is I'm doing. It's a conservative way to compound and rapidly grow your options trading account. And it gives you a balance. I stay at the money with my options. So if SPY's at $364.50 and it's at resistance and I'm playing puts, I'm going with a 364 strike. I'm not going far the money with a 363, 362. And I've been in 2 situations this week where my strikes have went about $1 against me, but the overall trend was bearish and I felt very confident in holding for a little bit longer, and I recognized that it was a premature entry and it was a starting position, right? So what I ended up doing was I just held those out a little bit and then I bought another strike and I went heavier on the other strike, made all my money back on the one I lost. And then in terms of the one that I lost on the first strike, it's either a small win or a small loss, right? So that's one thing that I'm utilizing as well. But guys, you should be absolutely crushing it, man. This is a beautiful market we're in if you know how to take advantage of it. You just have to understand who is winning, who is getting crushed. Investors, they're getting crushed. So take advantage of it, because within the midterm, they're going to continue to get crushed. The market's going lower overall within time. Obviously, there's going to be times where it flips micro bullish just to go lower again. But the situation that we are in, you just have to understand from the macro long-term perspective in the market we're in, we will be going lower. That's the situation. So continue to focus on puts at key resistance levels. Do not get caught in flip-flops when you're playing puts. This is like a micro flip-flop. Do not get caught. Yes, we understand it's just going to go lower within time. Do not hold. Do not get caught. Scalp in and out quickly and wait for the trades to come to you. Wait for the trades to come to you. Wait for the overreactions, man. Wait for the overreactions. I was saying right here, man, when we were at 361, right around here. So I played puts I played puts towards this 363, had a nice scalp here. When we were at 361, I was saying, to get me back in this game, I need an overreaction for puts. And I said the best price for puts is when we go back to that previous support. And your previous support was right here at this 365 to this pre-market wick right here at 364 towards PCP. And then boom, I played puts again. And I played a little bit early because I love the fucking entry. And then I added more into the rip and it just worked out so phenomenal in this situation. Wait for the overreactions. Wait for the unreal to happen. SPY just went from 360 to 365. You better believe when it touches previous closing price and goes back to red, that puts are going to print because it already sold off massively rapidly. So of course there's going to be some sort of micro crash. I'm not saying it's going to go back down a year, but take advantage of that. Do not be afraid of put options at the key resistance. Be afraid at the key support on the initial reactions. Like I said, previous support reacts as a resistance. This is your support. When it cracks, reacts as a resistance. Play puts. This is your support. When it cracks, reacts as a resistance. Play puts on a retest, man. This is easy money. Today was so fucking easy. Everyone should have done well today. This was such an easy trading day. This was, I would say, in terms of like trading performance with like accuracy and win rate, this was probably my best day within like a week or two. This was such a phenomenal trading easy day. So yeah. Now, in terms of my further updates for the micro, and just understand, guys, the market that we're in, investors are getting killed, especially if they're not hedging. And if they're not trading, they're missing out on insane gains, man. We're in a trading market. We're not an investing market, man. All these investors who killed it in 2020 and did not sell and take profits, they are getting absolutely crushed and giving back all of their gains, right? In terms of investing, it's going to take 3 to 5 years. It's going to take 3 to 5 years to recover. And just understand, in terms of proven history, these people that tell you that, just invest your money and you're going to make a 10% return annually, that's what it will average to. Just understand, that's not proven for the long term. The market hasn't been long enough to prove that, right? So just understand, it's not that easy and it's not that simple with investing. You truly have to know what it is that you're doing and get amazing entries and know when to average in. I'll never understand this dollar averaging cost theory. Like, If I'm buying a stock, I'm not going to be dollar average costing in this type of market. We're in a volatile market. If I'm buying and holding, if that's my strategy and I'm buying and holding, I'm waiting until another 30, 50% pullback to add to that stock. I'm not going to be continuously adding into small little dips when we're in an extremely bearish market. I have no interest in investing right now. Market's going to take 3 to 5 years to recover. There's going to be phenomenal investing opportunities, but it's still way too fucking early, man. Trading's where it's at, and trading's always where it's going to be at. Holding is not where it's at. That's going to battle your mind. Too many flip-flops. Stick to scalping. Get in, get out. Scalp puts a key resistance. Scalp calls at the best support level possible. Be aware that we're in a bear market, so focus on the puts at resistance. With calls, you really have to wait for the oversold reactions. And a tip I'll give you is those oversold reactions towards the end of the day, when they are so beaten down and when the theta decay has destroyed them so much where it's just due for a pop, where people just get trapped so badly buying and holding calls that it just has to spike. It's just too late into the day where there has to be some sort of spike with that theta decay and with that overreaction, right? So just keep those things in mind in terms of calls. If you are buying dips, wait until the end of the day, like 2, 3 p.m. with the patterns. Do not be buying them early on super bearish days. And then puts, stay printing at key major resistance levels. So now let's get into this buy. So in terms of my puts, I don't like playing puts at key support levels. Now, when major support cracks and it rips back up to previous support and that reacts as a resistance level, then I'll be interested in playing supports. Like I said, do not get it twisted. If this is support and it cracks, then I look for previous support to react as a resistance. Therefore, I'm not playing puts at a support level anymore. I'm playing puts at a resistance level because if previous support reacts as resistance, then I play puts, right? People had that twisted within the chat today. One guy just didn't get it. So just understand that. Just understand what it is that I'm doing. Now, let's get into this. We are dropping like a rock during extended hours. We are at $360.30. Let's take a look at the daily chart, right? We're just so volatile that this video can only do so much. I mean, there's going to be so many more updates in the pre-market. And then of course, later into the day, best trades are made during like middle of the day, past ideally 10 a.m. Depends on the situation, but that's when the best and easiest trades are made. So let's take a look at the daily chart. We're at 360 right now. Let's see where the support is. Let's see where the gaps are. We got to go further back here. So let's see. Okay. So we have a gap to fill on the SPY at 357.46. That's going to be one key level. We have a gap to fill at $362 that already filled. So 357 and another gap at 353. These are going to be some key levels. So like I said, I'm not interested in these puts at this low of a support level, right? I'm not going to be the guy who gets puts at such a bad support level, and then the micro trend flips, even though it's going to crash again, but the micro trend flips and you just get squeezed like hell. I'm not that guy. So here's my game plan, right? I wait for the best levels, and if you wait, it comes. The trend comes. So here's my key levels for you. This is going to be one key make it or break it level. We're going to call it this 362 to like 361.30, that zone. We cracked. If it reacts as a resistance, it's bearish and it goes lower, right? Not too interested in the moment. Your best level is going to be this 363.38. The previous closing price. If you see the SPY at the previous closing price and it goes green, then it goes red again and it keeps flipping red, and it's forming lower highs, it's forming bearish, right? It's turning previous support into resistance. If you see 363.38 react as a resistance tomorrow, then you play the puts. And remember, if these levels react bullish as support levels, then SPY goes bullish into the next resistance level, which is all determined within this 5 and 30-minute chart, right? So those are my key levels. 363.38 is my main key level for tomorrow. It's nearly at the previous closing price of yesterday at 364.31. Had some nice prints on puts back to back. And then I do want to see how we react at this 361. Just please do not be that guy who just chases puts at the lows of a support level when that support level didn't crack and it didn't spike back up and turn previous support into resistance level, right? So basically what I'm saying is this is support at $363. If it cracks, do not buy puts into the dip. Wait for it to rip back up to the previous support. Then when it reacts bearish, right, you have to wait for the bearish reaction. You can't just blindly play puts into a key level, right? Even if the trend's bearish and previous support, you have to wait for confirmation to see if previous support reacts as a resistance, unless you're using like a super tight stop, what Starnes does. But be that guy who waits. who waits. You wait for it to crash, rips back up, previous support reacts as resistance, then it sells off, right? Be that guy. So I want to see how we react at 361. My best level is 360, 338. And as always, 370 and 374 are the best level for puts. I'm going to absolutely crush it tomorrow. I'm looking forward to trading this SPY, guys. I have never been so dialed in and so accurate with the SPY before. And one thing that has truly helped me with that is the 30-minute candles and waiting until like later in the day. Those are when I'm finding the most predictable trades to be occurring, right? But I did have that morning trade. I'm not the biggest fan of trading in the morning anymore, but I did have that morning idea and I gave it away in yesterday's video. I literally said, extended hours, wait for the pullback during extended hours, short the double top, not blindly off the double top into the key level, wait for the backside, right? So I'm not shorting into the front side. This is the front side of the move. It's breaking out. It's trying to go bullish. I'm not shorting into the front side. I'm waiting for the pullback. Once it cracks this resistance level right here, it cracks and my buying puts into the dip. Absolutely fucking not. I'm waiting for it to rip back up. Previous support right here, resistance, bearish candlestick, short into the green doji right here. Boom. Short into the green doji right here. Previous support reacts as resistance. Previous support reacts as resistance. That is how it's done. Those are my key levels. That's what I'm looking for SPY. We're going to absolutely crush it within Trader Society tomorrow. Big shout out to the members within Trader Society, man. You guys are working hard. You guys are absolutely crushing, man. Lee, the consistency is absolutely insane. A 76% return within the past week, man. It's absolutely insane. SPY Raiders, 9%. So in terms of my strategy and my portfolio, what you can expect from me with the level that I'm at right now, I'm a lot more conservative. So you can expect like 2%, 3%. If I have a big day, it could be like 6 to 10%, right? That's kind of where it is that I'm at right now. Everybody has their own sense of risk management and position sizing. I'm focused on conservative. I am focused on compounded gains. And my number one focus is to never have a red day. And if I do have a red day, to never have a big red day. I do believe it's possible where you can basically put yourself in a situation where if you know what is that you're doing with risk management, position sizing, and you know how to trade the strategies and trade these options, it can be extremely hard to come across a red day. I truly do believe that, right? Especially with the win rate that is that I have. So just want to bring awareness to all that. I'm not going all in. I'm putting in like 10%, 15% of my portfolio. One thing that I haven't been the biggest fan of that I've done these 2 days, I've identified that the trend's overall bearish. I'll take a starting position of premature entry. The strike doesn't work out, but it's a starter size. So then I'll do a new strike that's at the money. That one works out and it's a heavier size and it makes up for the loss on the other strike if it even is a loss, either a small loss or a small win. But that's been working out well as too, and that is an advantage as well. So yeah, just make sure you guys are sizing accordingly, man. Big shout out to Lee, big shout out to SPY Raiders, big shout out to Philip, man. Amazing consistency, man. I've seen you posting. Big shout out to Ricky. Big shout out to everyone within Trader Society. We're absolutely crushing it. So if you do want to be a part of Trader Society, it's going to be the first link down below in the description. Everything is explained in terms of what is included within Trader Society. It's a one-time fee. You get lifetime access to it. And I'm telling you, what you will witness is me in real time crushing the SPY. Both ways, mainly focused on puts, but I'm stepping my call game up as well. And you will see a team of traders crushing the SPY in real time, puts and calls. I'm telling you, this group, man, it's insane what we have created. We are dialed in and we are locked into trading the SPY. This is the most wealthiest thing you could be doing within the market is trading options on SPY. And I'm doing it and teaching it in a conservative fashion where you can compound your account and change your life within 1 year of consistency and discipline. Remember, the market's rewarding people who are compounding their account, who are consistent, who understand what is that they're doing with their trading, who understand risk management and position sizing, not going all in, not taking big position sizes, who are cutting their losses quickly, sizing in accordingly, trading the best setups at the best prices, waiting for the trades to come to them. Those unreal overreactions. What's an unreal overreaction look like? This is an unreal overreaction. When SPY has this previous support at 364.80 right here, and it pretty much never touched. It touched right here with a lower high, then it crashed. But for the most part, it didn't really touch. And then it sold off massively in a short period of time, and then it rips back up very, very quickly. That is an overreaction for puts when you see this flip green to red on the day with these lower highs to play puts. And I called that out clearly, man. That was such a good overreaction play. But you got to wait for that play to come to you. You can't be just sitting here and scalping all this mess right here. You can try that, and that's smaller wins, and that can work too. But focus on the big moves, man. Wait for those big moves to come to you, and then play the reversals, man. Look at this. You have very nice support right here. It forms a lower high here, big sell off. You have support right here, big uptrend, big spike, but it happens so quickly, reverses. Happens so quickly, reverses. Overreactions. Wait for the place to come to you, or don't trade at all. Those overreactions are insane. And when you see those reversals and that nice green to red move and it's flipping green, red, 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 red and staying red, and you look for those lower highs, that's when you're really going to want to play those puts, man. Those opportunities are amazing, but you have to set yourself up to take advantage of those opportunities, man. So if you do have a smaller account, you can take advantage of that by utilizing a cash account and sizing in less, right? You'll have much more trades using a cash account. If you have a small account, I would use a cash account. I would not use a margin account. If you are above 25K and you're an experienced trader and you understand what is that you're doing, then I would switch to the margin account, right? A margin account isn't going to really do anybody good if they don't understand what is that they're doing. But if you know what is that you're doing and you're experienced, then use the margin. But if you have a small account, use a cash account. I'm telling you guys, in terms of brokers, use Webull. Use Webull. It's commission free, and use a cash account with them if you're below 25K. If you're experienced and you're ready for it, take on the margin, and you're going to need a lot of discipline with margin, right? Margin is a double-edged sword. If you have discipline, it's going to be your best friend. If you don't have discipline, you will experience very, very quick losses and setbacks. If you don't know what it is that you're doing, you have to have insane discipline. You could be the most disciplined trader for a year straight, but one bad day off your game where you're just throwing money away and getting emotional can be a major setback. And you have to have that awareness of what your max drawback is. If you do ever have those days, you should never have those days in terms of your mindset and mentality. But if it does happen where you're just trading off the fucking rails, there needs to be a max setback for that situation, but that should never occur. I've had those days, but I'm getting to a place where it's just never going to happen again, man, because I'm really dialed in and focused into what it is that I'm best at, and that's scalping. I used to try to develop a strategy where I would try to, hold for bigger wins, but now I'm just not into that, man. I'm not aiming for that type of strategy. If I believe that it's going to go more in my direction for a longer time and it's some sort of special trade, I'm not really trying to hold it. I'm trying to scale out of it and then possibly add back at key levels, right? That's one thing I can do. But for the most part, I don't even need to do that. I just need to scalp at the best levels possible and make, a couple nice scalps a day as of now, like 3, 4, 5, 6, 7 scalps, and then boom, call it a day. Who knows, man, in the future, I might even get to a place where I'm making I might turn into one of those guys where I'm making like 10, 20, 30, 40, 50 trades a day. Who knows? But right now, in terms of the level and what I'm at right now, it's like 3 to 7 trades a day. That's what it's like right now. It used to be like 3 a week, but man, with this strategy that I'm utilizing on SPY, it's absolutely insane, man. But if you guys want to be a part of Trader Society, it's the first link down below in the description. You get access to the video lesson library. You get access to the risk management, position sizing, the mindset training within Trader Society. You get access to the price action trading strategies, the unique gap trading strategies that I've created. Where you can learn how to master SPY, learn how to trade both calls and puts. You get access to the networking opportunities. I'm telling you, there's been people in this group who've changed my mindset. Like Ricky, in terms of Ricky in this group, he literally said, every day's green. And when he posted that, my mindset literally shifted to, how can I make every single day green? Maybe it's not the biggest green day, but utilizing risk management and position sizing, maybe I make a little bit less on my green days, but I never have a red day, right? So I really started thinking about it, and then I realized, yeah, it is possible. It is possible to rarely have a red day. I do believe that is possible if you understand and know what it is that you're doing, and if you are disciplined enough, if you are a very high performance trader within this market, or you're different from the norm. You're trading completely different from the norm. You have a completely different mindset from the norm. At the end of the day, this is a competition of who can take someone else's money. And in terms of the average person in the market right now, they have no fucking clue what they're doing. So it's never really been easier to make money in the market if you have the education, you have that skill set, which takes months. It takes months to develop that price action and skill set, but it can speed it up with the right group and right education. And if you are putting all of your time into effort in trading just the SPY, it can really speed it up. That can really sharpen your edge. This is all I do. It's just focus and trade, the SPY. That's really all I've been doing and focusing on, right? So if you want to be a part of that group and gain access to the secret society, it's the first link down below the description. It's a one-time fee, it's lifetime access. You get access to the Discord chat room as well, the live trading streams, and there's just so much more to it in the networking trading opportunities. I'm telling you, man, some people in there are very, very positive, and that has been reflecting on me lately, and that has really shifted my perspective to just focus on the positive outcome and to really just shift towards positivity. And it's really improved my trading. It really has, man. So if you want to be a part of it, it's that first link down below in the description. For those of you who stayed to the end of this video, the bonus play is going to be Sava. So Sava has finally filled the gap. The gap was at $51.06. As of now, it hit $52.80. This is a very bearish candlestick. So I'm just going to be very blunt about this. If you see Sava go under $51.06 and it reacts as a resistance, play the puts and look to get out towards like 47.50, right around there, right? It has to go under 51.06 and turns to resistance. If it doesn't do that, then don't play the puts. Simple as that. So yeah, that's my thoughts. That's my analysis. If you want to join Trader Site, it's going to be the first link down below in the description.